Hi and welcome to episode 4 of Ask Paul. Today we're going to discuss mortgage interest rates. I suppose before we start getting into the video, I want to discuss the fact that what I'm doing today is for an example purpose only. The institution that comes out best in today's example isn't going to be the same for everybody. There's a couple of factors to consider when you're looking for a mortgage. It's going to be the term of the mortgage, how long that's over, whether it's 20, 25, 30 or 35 years you want to repay the mortgage, how much of a deposit you have, whether it's 10, 15, 20, 30%, etc. So some lending institutions will give you a better interest rate if you have a better deposit. So if you've got a 30% deposit, you're going to get a better interest rate than with some other institutions. Today's example, I took a kind of typical first-time buyer in the Dublin marketplace. 300,000 property, which is a 10% deposit and a 270,000 mortgage. We took that mortgage, put it over 35 years. 6 lending institutions came back when we looked at the research on it, and they mentioned AIB, KBC, Bank of Ireland, Pepper, Permanent TSB, DBS, etc. So when we looked at the lending institutions, I'm going to just talk today about the vast difference in advice between 2 lending institutions in particular. The cheapest rate on the marketplace is 3.5% variable over 35 years, and that was with AIB. The most expensive was 4.5%, and that was with Bank of Ireland, and there's a few in between, but we'll just discuss the cheapest and the most expensive. Couple of things to consider here is that the difference between the repayments on them wasn't actually that much. It was €150 a month, so I just have the figures here in front of me. So the repayments for Bank AIB were €1,212, and with Bank of Ireland were €1,338 or €68. So like I said, not a big difference in relation to repayments. Some clients might be swayed by the amount of advertising that Bank of Ireland are doing. Bank of Ireland are giving very good upfront kind of cashback deals. So if you move or you take a mortgage out of Bank of Ireland, you get 3% cashback rather. That cashback is split up in 2 ways. You get 2% upfront and you get 1% in 5 years' time. So if it's €270,000 mortgage, Bank of Ireland are going to give you €5,400. And most people like that because they can maybe pay their solicitor fees or get moving into the house and get a few, maybe kit out the house with furniture, etc. The problem with that is it's misleading because it's a 4.5% rate, so it's 1% per annum more expensive than the cheaper one for AIB. AIB don't really have a great offer to entice you other than the interest rate, which obviously is the best offer, but it's not advertised that much. They have, I think it's 30% back on their home insurance, which is going to save very little over a year, to be honest. One thing I will say though is the difference between the 2 repayments over the 35 years. So obviously you're taking a mortgage, you're paying it over 35 years. One thing I will say again is that you have to take it as your financial advisor, whatever you're getting is a snapshot of today. So you're looking for a mortgage today, you can't think of what it's going to be 5 years ago, or sorry, it's going to be 5 years time, what the interest rate's going to be, or what the interest rate is today. So you have to look at today's terms and take a snapshot and make the best decision today. And in that case, it's AIB. I'll tell you why. The cost of interest that is going to cost the consumer over 35 years with AIB is €166,000. So interest is €166,000 over the 35 years with AIB. With Bank of Ireland, that interest is €222,000. So there's a difference of over €56,000. So forget about the cashback up front, forget about all the kind of the frills and the advertisement that they're going to put out there from Bank of Ireland. If you go with AIB in this scenario, you're going to save €56,000. The purpose, again, obviously, I know everyone watching the video is going to be different. They're going to be borrowing more, borrowing less, bigger deposits, etc. So the point of this video is to encourage you to go speak to somebody, a professional financial advisor, a mortgage broker, somebody in relation to your, and not just going into a bank. For this case, if you're a Bank of Ireland customer, you had to walk into Bank of Ireland, it's going to cost you 56 grand more than you've had to walk down the road to AIB. And that's a phenomenal difference. So again, make sure to go into a mortgage broker and they'll be able to give you the best advice around what mortgage to go for, etc. If you found the information here good and you like what we're talking about, please don't forget to share the video with people that you think might be in the first time buyer market, or obviously with friends for more financial advice to come in future episodes. Also, don't forget to like us or follow us on Twitter at askpaulnow and also on Instagram at askpaulnow. And you can also follow us on Facebook, and please subscribe to our YouTube channel. Any questions at all, please don't hesitate to make a comment below or direct mail me. Also, you can send us to an email at questions@askpaul.ie. Thanks for your time today. Take care and chat soon.